So there's also part B, Apple 3B. They want students to outline 4 advantages of multiple tax system. Tumefanya hiyo, si ndio? Kwa ile handout ya kwanza nimekupatia kuna hiyo advantages of multiple tax system ni marks 4. So ni marks mingi sana. And then now part C, 3C, the employment income, it reads, Boniface Hooker is a residential individual and qualified pharmacist who has been employed by Sawa Hospital since his early retirement from the public service in 2016. So the following details were availed to you in respect of his earnings for the year ended at 1st December 2017. Number 1, he received a monthly basic salary of 184,000 shillings from Sawa Hospital. Additional 1 month basic salary was paid to him in December 2017 as bonus. Pay deducted during the year was 897,600. Number 2, pension received from the public service was 540,000 as a lump sum amount. And number 3, a commission of 109,000 was paid to him for the promotion of drugs under an identified brand during the year. Number 4, during the year, he was sent to Mombasa for a 4-day medical conference and was paid a daily subsistence allowance of 18,000 by the hospital. And number 5, he has a fixed deposit account of 1.5 million shillings at Broadbank Limited, from which he received an interest of 105,000 shillings during the year. Number 6, he has life insurance policy where he contributes 40% of the 60%. So 60% of 460,000. Remember, we are listing the benefits that he is getting from the employer. We are listing the benefit. So if you contribute on your own behalf, that is under benefits. Ni kweli? So tunaangalia zile benefit yanapata kwa employer. So 60% of this one is how much? So naandika hapa 276,000. Hiyo ni insurance premium. Tumemaliza number 6. Number 7, he was provided a saloon car of 2,000 cc by the hospital for personal and official duties on 1st July 2017. The saloon car had an initial cost of, so here we have car benefit. Another thing you need to remember when you're doing employment income question, you need to know at what point was the benefit provided. Was it given for the whole year or for a portion of a year? So you need to be keen on the timing. Was it provided for the whole year? So this car was only provided from 1st July. So we go for the CC ratings. CC ratings are provided. Ukiangalia the first page of your question paper, kuna table hapo. There's a table that is given. In that table, the last column of the table has the ratings. I don't know whether you can see it. Come on up. The last table. I hope you have the latest question paper. These things, they keep on changing. So we are going to use the latest. Hii hapa mwisho, sindio? Sawa. So unaenda unaangalia pale, you go and check where 2,000 cc lies, cars. So we have the saloon cars, and then we have pickups, and lastly down there we have Land Rovers and Land Cruisers. For Land Rover and Land Cruisers, irrespective of the CC ratings, so long as you have mentioned the word Land Rover or Land Cruiser, you go to the Land Rover or Land Cruiser, you ignore the CC ratings, provided they have used the word Land Rover or Land Cruiser. So now this the car that the unasema nini? Haujaona? Ziko hapa, ndio hizi hapa, si ndio? So unaangalia 2000 line wapi? Si ndio hii hapa. Sawa. Hiyo kila mtu anapewanga kwa exam, si ndio? So inakuwa the first page of that question paper. Usione hiyo page alafu anze kustuka, na hii ni nini? Sasa umeiona? So if you check the 2000 cc monthly rate is how much? 7,000. So 7,200. And then now you multiply by 6. You take the monthly rate and then you multiply by 6. From July to December, how many months are those? 6 months. So inakuja ngapi? So 43,200. And then we said 2% per month of the initial cost of the car. So now 2% for 6 months, it will be how much? 12. Is it 2% times 6? Itakuja ngapi? 12%. Si ni kweli? It is 2% per month. And the car was given for how many months? 6. So 2 times 6 itakuja 12%. If the car had been given for the whole year, it would have been 24%. Isn't it? But now the car is only given for a half a year. So the initial cost of the car is 2,800,000. Yes. Yeah, alipewa saloon kama. Alipewa saloon kama kwa amepewa land. Unasema? Sorry? Unaangalia? Hii unaangalia latest, nataka uangalie latest. Hii ni ya kitambo. Unajua hizi vitu zimechange. Ukiangalia ukiona question latest. Okay. Hii ndo, this is the latest ndo hii hapa. Unaona hii? So pia utakuwa na hii. So unakuja unaangalia 2000 na lie wapi? So unaona 2000 na lie hapa. Sawa? So monthly hizi ni monthly rate 7,000 na hii ni yearly. Sasa sisi tunachukua monthly because ni 6 months. Sawa? So now you take 12% of this. How much is that? 336,000. Like this. And then here you pick the higher. You pick the higher is how much? 336. Now, this car was partly used for official duties and partly used for private affairs. So now this benefit here, we are going to share it half-half. We've not been given the percentages for official duties and the percentages for private. So now we're going to share the highest, because we have been to the for personal and official duty. So we're going to take a half of 336,000. So it is on a 50-50 basis because the question is the percentage, the proportion of benefit is silent. If they had specified, we'll use the specification, but they have not specified, isn't it? So we're going to assume it is 50-50. Tunaelewana? So inakuja ngapi? 168,000. So you write here 168,000 and make sure you align, you have your workings and then you align your figures there so that the marker can be able to identify them very fast. Yes. If the car was purely for private use, then the entire amount will have been taxed. Is it if the statement was that the car was purely used for private affairs, isn't it? If it is for official duties, it's not taxed. If you're given a car for official duties, it's not a benefit to you, isn't it? It's to facilitate your work, isn't it? So that one will not be taxed. That is why even here you're excluding that portion that is for office. So yes. We are saying this guy was given a benefit, a car benefit, isn't it? And then we have determined the total taxable benefit should be 336,000, isn't it? But the statement says this car was used partly for official duties and partly for private, isn't it? So now we are only interested with that private portion, isn't it? So that is why we are dividing by 2. So that is, it should be 168,000. So that is number 7. We go to note number 8. The hospital has a medical cover for all staff. He was entitled to a maximum of a maximum cover of 180,000 per annum, while he utilized 74,000 on medical bills during the year. In other words, his medical bills worth 74,000 were paid for by the employer. So that is a benefit to him. Is it so? But you remember what we said about medical benefits. We said if the employer is running a scheme that is covering all the staff and you are a beneficiary of such a scheme as an employee, then you're not taxed, isn't it? So the medical benefit, you can, in some other question, they will ask you to comment on items not used, because that one you're not going to use it, isn't it? So you'll write a comment there and say medical benefit non-taxable because it is covering all the employees. So here you can either opt to write it here and write a dash or leave it. It is the same. So if you write here medical benefit, you can write a dash here. In some other question, they will require you to comment on items not used. That is one of the items not used. You comment on it. That is number 8. Number 9, during the year he was provided with a house. During the year he was provided with a house. The market value of the house was 120,000 per month. He contributed 20,000 per month as nominal rent. So we said the housing benefit, if you're given a house, we have to determine the taxable value by taking 15% of the total gains from employment, isn't it? So that one will be the last item after we have listed all the gains. It will be the last item. So the house benefit is determined the last because it is based on 15% of the total gains from. So you must first of all list all the gains. So number 9, we'll come back to it. We'll go to number 10. During the year, the hospital settled his bills as follows. So we have telephone. So telephone bills. Anyone who can remember what we said about telephone? 30% of the total bill. So it's going to be 30% of the total amount that was paid during the year. So during the year, you see, so this 68,000 represents the total amount that was paid during the year. So some other question they will tell you monthly. So you have to convert it into yearly amount before you take 30%. So that will be how much? 20,400. So this is the taxable value. Then there was also what? Water. So water, we said you take the prescribed amount prescribed amount, the yearly amount. It is also provided in there on that very first page, the one that we are also looking for, the CC ratings. So if you check at the water, where is the water? After the table, there are some other writings immediately after the table. And then there is the commissioner's prescribed benefit rates. So we have, they have written their services. And then we have Roman 1 is electricity. Roman 2 is water, communal from or borehole. So we have monthly rates and yearly rates. So the yearly rate is how much? 6,000. So the prescribed rate here is, so you write here 6,000. Then the actual bill or the actual amount or the actual bill, the amount, how much was it? It was 18,200. Is it so? Here you pick the higher of the two. You pick the higher of the two, which is 18,200. That is how we determine the taxable value for water. Electricity, the same thing. Electricity. So the prescribed amount. 18,000. And then the actual bill. 24,600. 24,600. So you pick the higher of the two, which is 24,600. That is electricity. So we are through the note number 10. We go to note number 11. The hospital contributed 5% of his basic salary towards a registered pension scheme, while he contributed an equal amount to the scheme. So we said if the employer contributes on your behalf as an employee to a pension, registered pension scheme, that contribution is a benefit to you, but it's not taxed, isn't it? The one that you contribute yourself as an employee, it qualifies as you to an allowable deduction. So that one we're going to, after we listed all the benefits, we will deduct later on. So that is how we deal with the number 11. Number 12. Sorry? Which one? Yeah, you don't indicate it there. You don't indicate, isn't it? You don't indicate it. It doesn't earn any mark. Or if you, okay, you don't indicate because it's not taxable. We are only interested with items that are taxed, the benefits that are taxable. And then number 12, the hospital paid subscription fees on his behalf to the pharmacy and poison board amounting to 54,000 during the year. So he's a pharmacist and he belongs to the pharmacist board, the professional association that regulates their profession. And we said if there's subscription coming from your employer as an employee towards a professional association, that one is not taxable. Sindio? That is a tax-free benefit. That is what we said yesterday. Number 13, he was reimbursed private entertainment expenses of 120,000 shillings by the hospital during the year. He was reimbursed. So he went for private entertainment and he used 120,000 and he was given that money back. So it means he went for entertainment for free. So that is a benefit. So that is an entertainment allowance. Entertainment allowance, which is 120,000. So now we'll get all the benefit before. So we write here total gain, total employment gains before, total employment gains before house benefit, So we add all of them accurately from to the last one. Total employment gains before house benefits. How much? 42. 32. 82. 200. Everybody this one. And then now you come here and compute the house benefit. So house benefit, we said it is 15% of the total gains from employment, which is 32, 82, 200. So what do you get? 192, 492, 330, isn't it? Then you compare the market value, market rental value of the house, market value. So you have been told the house, the similar houses are paid for at 120,000 per month, or the market value of the house is 120,000 per month. So you multiply here 120 times 12. The house was given for the whole year. 120 times 12 ni ngapi? Yeah, we are going to take care of that. Sorry? 40,000. So you pick the higher of the two, but after the higher, you less the nominal rent. Nominal rent. How much was the nominal rent? He was contributing 20,000 per month, isn't it? So you multiply here 20,000 times 12, which is 240. 240,000, isn't it? So after picking the higher of the two, you deduct 240. So which is the higher of the two? 1440 minus 240. So 1,200,000. So those we are now through with all the benefits. And then here we come here and less allowable deductions. Allowable deductions. So we said we have allowable. Allowable means they reduce the amount that is supposed to be taxed. So the first, we listed around 4 items. The only item that is here among the 4 that we listed is pay. So we write here pension. So pension, there is the actual contribution, the actual amount that he contributed, actual contribution. So he was contributing how much? 5% of his basic salary. So 5%, so it's going to be 5% of 208,000. How much is that? The basic salary for the whole year. So this is going to be 110,400. And then we have the set limit. Set limit per annum is 240,000. You're supposed to know that. And then there is the 30% of the total employment income. 30% of 382, 32, 82, 200 plus 1,200,000. So those are the total. So 30% of that, how much is that? $13, 44, 660. So here you pick the lower of the two, which is 110,400. You deduct from, that is, you pick the lower of the two. So you pick the lower of the 3 figures. You deduct it. So now we have exhausted everything. Now you get here what you do, total taxable employment income. Total taxable employment income. So now you add this figure plus this minus this. Total taxable employment income. $43,71,800, sindio? Now if there is any other incomes, now you come here and say other incomes. So first of all, finish with employment income first, and then now come for other income. So the first one is pension. Pension. Kuna shida? Ako right ama ameanguka? So tunakuja after you are through with the employment income, you go to the other income that might be there. So we have note number 2. Pension received from the public service was 530 lump sum. So pension 540,000, isn't it? So we said the exempt amount is 600,000, isn't it? So the entire amount will not be tax because it is even less than the exemption. So it doesn't. Sawa. Tumeelewana? Unasema pension tulisema if you receive pension, if you receive lump sum, we said the first 600,000 is tax exempt. So he received 540, which is less than even there. So the entire amount will be exempt. Yeah, pension. If you receive annuity in form of pension, the first 25,000 per month is exempt, which is equivalent to 300,000. So your pension utakuja uandike hapo vile tumeandika hapo na uandike hapo dash. And then we have interest income. You also received interest. We said if you're an individual and you receive interest income, you pay withholding tax of 15%. And that is for sasawa. So you write here interest withholding tax. Withholding tax for final. Unaandika hapo dash. Tumeelewana? This is inasimamia for withholding tax. Withholding tax. We said when you receive interest income, in this case, he is receiving from where? From the bank. So when the bank will pay him this interest, they will deduct 15% of the interest as tax, and the bank will remit it to the government. You as the recipient, you will not pay any tax, additional tax. That is the final tax. Now here we are through this guy. We get your total taxable income. Total taxable income, which is now 43,71,800. So that is how we do those. That is how we determine the taxable income. Tunaelewana? Any question so far? Pension hii tulisema kama wewe umeandikwa kazi, si ndio? Kama huyu jamaa alikuwa ameandikwa kazi na una contribute kwa pension scheme,
wewe ndio una contribute kama mwajiriwa, si ndio? Wanakupunguzia ile pesa unafaa ulipe. Unapunguziwa ile taxable income yako sasa. So unapunguziwa aje, unaangalia ile pesa una contribute, the actual contribution yenye unafanya. In this case huyu jamaa ame contribute this much, si ndio? Alafu kuna ile set limit, kiwango ile huwezi pita. Ni 240. Alafu pia una compare na 30% of the total gains from employment. Zile benefits zote unapata kutoka kwa employment. So unachukua ile ya chini kwa hizo tatu. Unachukua ile ya chini. So kwa hapa kwa leo ni hii ndio ya chini. Si ndio? Unapunguza nayo ile pesa inafaa ifanye nini? Itoze ushuru. Ama namna gani? So that is how we do it. Then now here we come here and tax liability. Tax sasa unakuja unalipa computation of tax liability, ndio? So naandika hapa tax liability, huyu jamaa anafaa alipe. So we use what we call the graduated scale rate. Hii graduated scale rate unapewa. Na hii inatumika hata sasa. Hii inabadilika kila saa. Inabadilika kila saa. So tunaenda kutumia ile inatumika saa hii. Ndio pia wewe ukiingia huko pia unatumia saa hiyo, si ndio? So ile yenye inatumika saa hii, sijui kama una pepa kuanzia April 2022, angalia tunatumia ile latest. Hii inabadilishwa na government kila saa. Wamebadilisha mara mingi. Sasa, so we are going to use the latest scale. So this scale you have it in your question paper. The first from if you check, I think from 2022 up to date, we still have the same scale. So now you take the total taxable amount. Here you write your taxable amount is 53,43,71,800. And then here you write the rate, and then here the tax. So they are saying the government, this is what we call it is progressive, and at some point it will be the same, it will be proportional. So the government is saying from your first, the total taxable amount, the first 288,000 from this amount, 288,000, the government is only interested with 10% of that amount. 10%, isn't it? So the tax you pay there is 28,800. Any excess amount, if you're earning more than 288,000, then it means the excess will qualify to the next level. Are we together? So this guy, and the excess is how much? $437,408. Sorry, excess is 4,083,000, like this. So that is, this means now this remaining amount is untaxed, which qualifies us to the next level. That is the difference between 388 and 288. 388 and 288 is how much? So the next 100,000 from the remaining untaxed amount, we only take 100,000. We only take 100. That is the difference between the first level and the second. So the second level is 388 and the first one is 288. The difference is how much? 100, isn't it? So from this amount, you only take how much? 25%. So you only pick 25, which is 25,000. Any amount above 100,000 will still not be taxed. Sawa. So this was the amount that was not a tax, ndio? Kwa hiyo yenye imebakia tunachukua tu only 100,000, ndio? Na kwa hiyo 100,000 tunachukua ngapi? 25, which is 25,000. So any excess inakuja ngapi? So 48,800 minus 100,000 inakuja ngapi? 39,18. 83,800. Now the remaining amount you tax at 30%. This one, yenye imebakia yote unatax na 30%. $11.95. 140. Hivyo. So now add zote, you aggregate all of them, and then you get what we call gross tax payable. Gross tax payable. That is a gross tax payable. Gross tax payable ni ngapi? Gross tax payable. You 1248.9, and then you less pay. If there is any pay you've paid, if there is any amount that you paid, pay you say it is an advance tax. You are doubting this half figure. It is okay. So if there is any pay you say it is an advance tax, you deduct it. 897,600, and then you less personal relief. Personal relief, we said it's a relief that is given to all resident taxpayers. It is indicated here on the first page. The current amount is 28,800. It is indicated there. So you less that one, 28
800. Hiyo ni nini? Personal relief. And then if you're contributing to insurance, life insurance premiums or educational premiums. So if you're a contributory to life premiums, or you're also entitled to what we call insurance relief of 15% of the total premium subject to 60,000. Shouldn't go beyond 60. Kama unatoa pesa, if you are contributing to life insurance premium or educational premium, you are entitled to insurance relief of 15% of the total premiums, subject to a limit of how much? 60%. So you are going to less insurance relief, which is 15%. The total premium was paying was how much? 460, isn't it? Even the one that the employer is contributing on your behalf. So long as there is what we call life premium or educational premium. If the employer is contributing on your behalf, that is a taxable benefit. But besides, the amount qualifies you to a relief. So 15% of 460 is how much? 460 alikuwa anachanga kwa insurance premium note number, alikuwa anachangia premiums life premiums, ndio? Hiyo ilikuwa ni note number 6. He has a life insurance policy. Ndio nasema kama uko na life insurance policy ama educational policy, sawa. Either wewe ndo unachanga ama ni muajiri wako anakuchangia. Employer ndo anachanga. Kama ni wewe unachanga bado una qualify, lakini si benefit. Lakini kama ni employer anakuchangia ni taxable benefit, lakini pia bado ina qualify kwa relief. Tumeelewana hiyo lugha? So 15% of 460 ni ngapi? 69. So inafaa ikuwe 60, sipite 60,000. Ikipita 60 ndio inatolewa. Sawa sawa? So subject to see, so utatoa hapa 60. It should not go beyond 60. So you take if it is lesser than 60, you take that amount. If it's beyond 60, you take 60. And then here you get what we call the net tax payable. Net tax payable. Net tax payable. Hivyo ndo tunafanya hizo maswali. So if you check the requirement of the question, so far we have answered part Roman 1 of the question, which wanted us to compute the total taxable income. We have done it, it's here. And then we have also computed the tax liability of the taxable income. It is here. So we have exhausted the question. The good news is that this question will be examined in your exams. Inakuwa question number 3, always. Unasema? Sorry? Jana tulisema kuna investment income. Investment income tulisema kuna dividend na kuna interest, ndio? Interest tukasema ziko classified into 3 categories. Kuna qualifying interest income. Hiyo ni interest income, it relates to individuals, yani individuals, sio kampuni. Tukasema individual receive interest income, si ndio? Anaenda receive kutoka kwa bank ama kwa government bonds ama kwa housing development bonds, si ndio? Akireceive your interest, ile institution inamlipa inakata withholding tax. Withholding tax, we said, is the tax that you pay at the source of the income. Si ndio? So that withholding tax is the final tax. There's no any other tax you pay as an individual. That is enough. You don't again come and add that particular income to other incomes to tax them again. That income, that tax that you paid at the source is sufficient. There's no any other extra tax you pay. That is what we said. If you're an individual, if you're a company, you have to add to other incomes and tax it again. Tunaelewana? Sawa. Kama ni kampuni lazima add the gross amount to the other incomes, tax tena. For interest income tusema hiyo. Sawa sawa? Aya, tutafanya maswali mengi na tuendelee. So I want to give you a few minutes to write those ones who have not been writing. Any questions so far? Okay, you take a very few minutes to write so that you can do another question. Then I give you another assignment. Rona, tax tutamaliza by February 15. So utakuwa na enough time usome, urudie maswali. Sasa kama hii wiki tumemaliza employment income. Tumebakia za computation ni ngapi? Za computation tulisema ni ngapi? 4. Employment income, business income, VAT na investment allowance, ndio? So next week tutakuwa tunafanya business income. Sawa sawa? Una swali? Andika hiyo. You can write it down neatly. Ama umemaliza kuandika? Unataka kupiga picha ama kuandika? Which one do you want to do? Andikeni haraka haraka. So can we do another one? Or you are, yeah, let us do another one. So we can also do another question, December 2021, question number 3B. December 2021, question number 3B. December 2021, question number 3B. So we are doing December 2021, question number 3B. 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 I'm reading. I will allow you to assist me to read, but we have other online. So the question reads, Alex Makali is an employee of Pengo Limited. So during the year of income 2020, he provided the following information to you to assist in filing of an individual income tax return. Number one, the basic salary of 144,600 per month, net pay tax of 19,600. Number two, he was provided with a Land Cruiser whose accumulated depreciation as of 1st January 2020 was 130,000, while the net book value was 1.6 million. Number three, he was provided with a fully furnished house. The cost of furniture was 250,000. The house had a fixed telephone. The average telephone bill paid by the employer per month was 6,000. Number four, on 1st September 2020, he moved into his own house, which he had acquired through a 15% mortgage loan of 4 million on 1st May 2020. Number five, he is a member of a home ownership saving plan where he contributed 48,000 per month towards the scheme up to 30th April 2020. Number six, on 1st July 2020, he obtained a loan of 2.4 million from his employer at an interest rate of 7% per annum. During the period, the Revenue Authority prescribed interest rate was 12% per annum. Number seven, he was out of his workstation in the month of August for 10 days on official duty. The company paid him an out-of-pocket allowance of 4,800 per day. Number eight, his salary was increased with effect from 1st September 2020 by 8,000 and backdated to 1st May 2020. Number 9, the employer paid school fees for Alex Macali's children amounting to 148,000. This expense was not taxed on the employer. Number 10, he's a member of registered retirement pension scheme where he contributed 30,000 per month towards the scheme. The employer contributed a similar amount. Number 11, his other income is included dividend from Wali Cooperative net of tax 85,000, rent income 280,000, net of purchase of furniture 40,000, and cost of advertising vacant houses 24,000. Number 12, he secured a life insurance cover for his family of 8,000 per month with effect from 1st October 2020. So required Roman 1, total taxable income of Mr. Alex Macali for the year ended at 1st December 2020, 12 marks. Tax liability, if any, from the income computed in 1B above. So now here you're going to write Mr. Alex Macali, Mr. Alex Macali, computation of taxable income, computation of taxable income for the year of income, for the year of income, the year of income 2020. Then you need clearly or neatly underline. Then here you can have your shillings. You write your shillings. So now we want to go item by item. So the first item is basic salary of 144,600 per month, net of pay of tax of 19,600, isn't it? So 19,600. So here basic salary. So write your basic salary. Basic salary of 144,600, and then you multiply by 12. How much? 17? So this one would be 17,35,200. The other payee is an advance tax. We're going to deduct from the gross tax liability. Number 2, he was provided with a Land Cruiser whose accumulated depreciation as 1st January 2020 was 130. Well, the net book value was how much? So here we have the car benefit. So you write your car benefit. So we have the CC ratings. CC ratings. So the car was given for the whole year, isn't it? So this Land Cruiser, I said, even if they have given you the ratings, just pick there under the Land Cruiser. So the ratings for the whole year is how much? 86? 86,400. So this is going to be 86,400. And then you need to take the 2% per annum, so 2% per month of the original cost of the car. So the original cost, you have been given the accumulated depreciation and the net book value. So if you add the two, you get the original, isn't it? Ama? So the net book value is 1.6, and you net book value. So NBV, net book value, is equals to the cost minus accumulated dip. So we have this one. We need this, isn't it? So we add. So we have been given the net book value, which is 1.6, isn't it? And then we don't have the cost. $200. So you pick the high of the two. So that is 415, 200. So here the thing to note when you're determining the taxable benefit for car, one, was the car provided for the whole year? That is one thing you check. Yes. And what is it a Land Cruiser or the saloon car? If it is a Land Cruiser, the CC ratings will be under the Land Cruiser category. If they have given their plate around, you must make sure that you always use the cost figure. The cost figure, not the net book value. So that one is true. We are through with number 2. We go to number 3. He was provided with a fully furnished house. So the cost of the furniture was 250,000. The house had a fixed telephone. The average telephone bill paid by the employer per month was 6,000. So here we have 3 benefits. We have the house benefit, we have the furniture, and the telephone, isn't it? So we're going first of all to pick the furniture. It's very easy to pick the furniture. So remember what we said on the furniture. We said it is what percentage per month? 1%, isn't it? So the house was given for how long? 9 months. Because we have been told in note number 4 on 1st September. So those are how many months? 8 months. So he was given the employer's house for 8 months. So now we're going to take 8%. 8% of the total cost of the furniture, which is 200. And when he moved to his house, he no longer enjoyed the furniture, isn't it? Si ni kweli? So inakuja ngapi? So 8% of 250,000 inakuja ngapi? 20,000. So this is 20,000. And then there's this telephone. The telephone, the average bill that was being paid by the employer was how much? 6,000. So we're going to take 30% times 6,000. It is fixed in that house, isn't it? So in other words, he enjoyed those bills for how many? 8, isn't it? Ama namna gani? Tuna telephone. So the telephone was being 6,000 per month, isn't it? The telephone bill paid by the employer per month was 6,000. So 6,000, he was in that house for 8 months. So how much will that be? 48,000 times 30%. Nakuja? 14,400. 14,400. Remember to number 4. Temporarily. Housing, we said, it is the last item. Number 5, he is a member. We also have mortgage interest. That one is an allowable item. Number 4, on 1st September 2020, he moved into his own house, which had acquired through a 15% mortgage loan of 4 million 1st May. So there's a mortgage interest that is allowable. It's a deduction item. And then number 5, he's a member of a home ownership saving plan, where he contributed 48,000 per month towards the scheme up to 30th April 2020. So what is it that we said on home ownership saving plan? Anyone who can remember? Home ownership saving plan? You do not? No, we said that is a deduction item, isn't it? It reduces the amount that is supposed to be taxed. He is the one contributing. Remember here, we are interested with the benefit he is receiving from the employer. So this one is the one saving. He is a member of home ownership saving. So it means you are given money and then you save. So that is not a benefit at all, isn't it? The reason it is there so that you deduct once you determine the total cumulative benefits. Sawa sawa. Tuendelee, number 6. On 1st July 2020, he obtained a loan of 2.4 million from his employer at an interest rate of 7% per annum. So during the period, the Revenue Authority prescribed interest rate was 12%. So we said, if you receive a loan from your employer and you're paying at a lower rate than the prescribed rates, then that is you need to compute what we call the fringe benefit tax separately from your workings. So that one you'll have to compute it separately. So we'll come to it again. And then number 7, he was out of workstation in the month of August for 10 days on official duty. So the company paid him an out-of-pocket allowance of, so out-of-pocket allowance. Out-of-pocket allowance. Out-of-pocket allowance of how much? 4,000. So this one we said 2,000 must be deducted. So how many days? You multiply by 10. How much you get? 28,000. So yeah, 28,000. Like this. 2,800, 28,000. 28,000, eh? Yes. Okay, there's a mistake you have done. Kuna mistake tumefanya. His salary was increased, number 8. His salary was increased with effect from 1st September 2020 by 8,000 and backdated 1st May, si ndio? So unajua hapa tutakuja tufanye hivi kidogo. So we'll do some changes here. Sorry for that. So his basic salary, it was 144,600, si ni kweli? So tuseme from January to April, si ndio? Si ni kweli? January to April. Is it so? From May onwards, it was added, you add, so this one you're going to multiply by how many? By 4, si ndio? And then plus, when you add 8,000 to 144,600, what do you get? 144,600 plus 8,000? 152. 152,600. So from May to December, his salary was 152,600. Si kweli? 152,600 times how many? 8 months. So you multiply by 8. Therefore, this figure is not correct. Tumeelewana ama tujaelewana hapa? Waliadjust mshahara yake September, ndio waliadjust. Walimuongezea 1,000 ngapi? 8. Na waka backdate kwa kuanzia nini? May. Ku backdate na maisha inafaa ianze kuanzia May. So kuanzia January mpaka April mshahara yake itakuwa tu 144,600, ndio? Alafu ile ikakuja ikaongezewa 8,000 ikakuja 152,600. So times 8. So inakuja ngapi? 17,99,200 hivyo. Si sawa? Aya, tuko number 9. The employer paid school fees for Alex Macali's children amounting to 148,000. This expense was not taxed on the employer. So what did we say about school fees? Ani wewe ukilipiwa school fees, wewe ama dependents wako? Dependents wanaweza kuwa watoto wako ama wale watu wanakutegemea, si ndio? So unawalipia school fees. Na employer anaweza amua kukusaidia akulipia school fees. So tulisema akikulipia inaweza kuwa ni tax ama not taxable. Inategemea vile yeye ameitreat. Sasa kama haitaxiwa kwa employee, wewe utafanya nini? Utapay tax. So tutaandika hapa nini? School fees. Wamesema it was not taxed on the, so it will be taxed on who? On the employee. The condition for school fees not to be taxed, it must be taxed on the employer. If it is taxed on the, if it's not taxed on the employer, then you will be taxed as an employee. So the total amount that is going to be taxed, how much? 148,000. Sawa. They are very explicit. They are saying the expense was not taxed on the employer. So the employee will be taxed. Number 10, he is a member of a registered retirement pension scheme where he contributes 30,000 per month to the scheme. The employer contributed a similar amount. So the one that the employer is contributing on his behalf, it will not be taxed. True? And then the one that he is contributing is not a benefit. However, it qualifies him to an allowable item, isn't it? So now we go to number 11, other incomes. Other incomes included. So that is other incomes, not the employment income. So that one relates to other incomes. Number 12, he secured a life insurance cover for his family. So he is secured. So he's the one paying. It's not the employer, isn't it? So it's not a benefit. So now here we get the total employment benefit, total employment gains, total employment gains before house benefit. So we add all of them before house benefit. Sorry? 24, 800. And then we compute here the house benefit. The house benefit. So the house benefit, we say it is 15% of 24, 800. Of course, now this one will be 8 out of 12. So the house was only given for 12, so for 8 months. So nakuja ngapi? Eh? 242 for 80. Like that. So now where you have not been given the fair market rate of value of the house, you only take 15% of the total gains from employer. Where you have not been given the fair market rate of value of that house, the value at which that house is being rent out, unachukua to 15%. Sasa. So here you have the market rent of value of the house. So you only take this 15%. Then you less allowable deduction here. You less allowable deductions at this point. So allowable deduction number 1 is home ownership saving plan. He's contributing to home ownership saving plan. We call it HOSP. Sindio? So there's the actual contribution. There's the actual contribution. Actual contribution is not number. He's a member, not number 5. He's a member of home ownership saving plan where he had contributed for 4,800 per month towards the scheme up to. So he contributed 4,800 per month for how many months? For 4 months only, sindio? Up to 30th April. So I'll contribute only for 4 months. Nakuja ngapi? 4,800 times 4. 19 to 1. 19 200. And then we have the set limit. So the set limit is 48. Is it 48,000 per annum? And then you divide this one by 12 in order to get there. This is 48,000 is for the whole year. We need to get there for 4 months. You multiply by 4. 16,000. So here you get 16,000. If we contributed towards the scheme for the whole year, then you will have compared it with 48,000. That 48,000 is the annual figure. But because you only contributed for 4 months, you have to determine the monthly rate, the monthly limit. And then you multiply by the number of months. So you take the lower, which is 16,000. Then number 2, he also contributed, number 6, he obtained a loan of 4 point. Sorry, not number 6. Yeah, I gave you the notes yesterday. I told you if you check the notes, you discussed these things yesterday. And I saw somebody with the handout here. Can I show you? So yesterday you were here, isn't it? We discussed this one yesterday. It is here. Note number 2, contribution to a registered home ownership saving plan up to a maximum of 4,000 per month to 48,000 per annum. Okay, so it is there. We'll discuss kila kitu. Nataka kuambia hii handout iko exhaustive. Iko na kila kitu. Sawa sawa. So that is home ownership saving plan. Aya, tuna mortgage interest. Iko wapi hiyo mortgage interest? Number 4. First, he moved into his own house, which he had acquired through. So we have the mortgage interest. The mortgage interest. So what is a mortgage? A mortgage is a loan that you acquire to build your own house. So the loan that you're acquiring, you have the interest that you're paying. It is the interest that is allowable. It is the interest, not the loan itself. It is the interest that you're paying on the loan. So now he took the loan from 1st May, isn't it? So the interest was, what was the interest? 15%. So here you write here the actual interest that he's paying, which is 15% of the loan, which is, the loan amount was 4 million, isn't it? So now the loan was acquired from when? May to December. Hiyo ni interest ya how much amelipa hiyo? May to December, those are how many months? 7 or 9? 8. So the loan, he paid the interest for, because he took the loan from May. Therefore, it means you pay the interest for. Itakuja ngapi hiyo? 15% is the annum, the yearly rate. Nakuja ngapi? 400,000. Are you sure? Inakaa mingi sana. 15% of 4 million and then divide na 8 over 12. 400,000. Aya, set limit. Set limit tulisema ni 300,000 per annum, si ndio? So una divide na 12, alafu na multiply na 8. Tunapata ngapi? So 300,000 is the set limit for the whole year. 200,000. So here 200,000. And then you pick the lower, which is you deduct. And then there is number 3, there's the pension contribution. Pension. So actual contribution, I'll contribute how much? Pension contribution. Note number 10. He is a member of a registered retirement pension scheme where he contributed 30,000 per month. So the actual will be 30,000 per month. You multiply by 12, which is how much? 360,000 here. And then the set limit. Set limit in ngapi? 204. 240. Then you take 30% of 242, 48, 00. 242, 48, 00 plus 242, 480. 242, 480. Unapata ngapi? 242, this is, then you add the house. Unapata ngapi? Huh? 800, 184. You pick the lower of the 3, which is 240. And then you get the total taxable employment income. So you get the total taxable employment income. So you get the total taxable employment, total taxable employment income. Unapata ngapi? So you're adding this one, this, and then you're subtracting these three items. How much? 2211 280. And then here you come here and write other incomes. Ako sawa ama yanguanguka? Ako sawa. So tuende kwa other incomes. Ali receive dividends. So dividend jana tulisema kuna kategori mbili za kategori tatu. So the first one is qualifying dividend. Hii ni non-qualifying dividend, isn't it? Utajua non-qualifying is dividend from Wali Cooperative. Si sako. So nasikia? Wali ko na wamekwambia hiyo 85,000 ni net of tax. So inamaanisha iko less na. So hii 85,000 hii, this 85,000 is 85%. They have already deducted 15% tax. So the gross amount must be included. So what is 100%? So it's going to be 100 over 85 times 85,000. Kuja ngapi? 100,000. So the gross dividend is 100. This one you're going to tax it. Sawa. Tuende kwa hiyo, the next income was rent income of 280,000. So tukiadd furniture after net of furniture ufai kudeduct, tuna add pale. So 280 rental income of, so we said if rental income is less than 10 million, the withholding tax is for 10%. Withholding tax is final. So long as the rental income is less than 10 per annum. So rental income here utaandika per rent. Withholding tax final. Withholding tax of 10% final dash. So tumemaliza. So hapo utapata total taxable income. So can we add total taxable income? So we add those two items. What do you get? Sorry? 2311 280. And then tax their own or tax liability. That is Roman number 2, you indicate. So they want us to compute the tax, is it? The tax liability, if any, or tax liability. So we use the current scale rate. The current scale rate. So the current scale rate, the total taxable income is 2311 280. So here you write the rate, and here you write the tax. So the first 288,000 you pick 10%, which is 28,800. Any excess amount, not a tax. So what is the difference? Nakuja ngapi? Sorry? 2023 to 80. And then the next what? Was it 100,000? At 25, which is 25,000. Ile ya taksiwa ni ngapi? Eh? 1923 to 90 to 80. Eh? This one you tax at 30. Nakuja ngapi? $576, $984. And then you get the gross tax payable here. Gross tax payable. Gross tax payable ngapi? Gross tax payable ngapi? 630, 784. Then we less what? Pay. Pay ilikuwa ngapi per month? 19,600 times 12. Kamuja ngapi? Eh? 235. And then you less personal relief. Personal relief ni ngapi? 28,800, ndio. Alafu kuna insurance relief. Alijilipia insurance relief. Alikuwa anajilipia ngapi? 8,000 kuanzia lini? So 8,000 times 3 inakuja ngapi? 15% off 8,000 times 3. 32. Is it 24, eh? Or 15% of 24,000. Nakuja ngapi? Eh? 3,600. Then we get here the net tax payable. Net tax payable. Alafu pia swali ilikuwa nataka to compute what we call the fringe benefit tax. So kulikuwa na FB. So hii ni other fringe benefit tax. Fringe benefit tax. We said this one is equals to amount of loan, and then you write, you have the prescribed rates. Prescribed rate minus low rate. So you write that. So alipewa loan ya how much the employer? There's a loan he was given by the employer. How much was it? So that is not number 2.4, sindio? So the amount of loan was 2,400,000, isn't it? And then the prescribed rate was how much? The 12. So here 12 minus 7. And then one was a loan given? 1st July. So it will be 6 out of 12. So that is nakuja ngapi? 6 out of 12. 12 minus 7 nakuja ngapi? Multiply by 2.4 and then divide by 0.5. So first, this is the fringe benefit. That is a fringe benefit. Eh? So this one is 60,000. That is 60,000. Sindio? So the fringe benefit tax would be 30%. This is a fringe benefit tax times 60,000 times 6 out of 12. So that is the end of that question. Assignment now, isn't it? That is the end of that question. So you can attempt this. Every sitting, we must have a question on employment income. So you can attempt September 2021 question number 3B. September 2021 question number 3B. Attempt that one. September 2021 question number 3B. I don't want to overwork you. So just do that one. Sindio? Make sure unafanya assignment na una submit. Hapo ndo utakuwa mtu wise. Unajua? Wisdom is application of knowledge. September 2021 question number 2B. Sawa sawa. So assignment September 2021. September 2021 hiyo swali employment iko hapo ni moja tu. September 2021, sindio? September 2021 question number 3B. 3B. So leo tarehe ngapi? So you sign against your name here. If your name is not there, you make sure you add. So I believe you have past papers wameshare past papers. Sasa uko na past papers na unafanya assignment. Sawa sawa? Sign hapo nataka kwenda na hiyo. Against your name. So the class for today, we have finished our class today. So we've doing question on employment income. Next time our topic is business income. Business income. If you respond well, responding well is doing questions positively. Then we might not need to waste more time here. We'll move on. That is when you do 2-3 questions successfully.